Hey, what's up, Silver Trader FM subscriber and viewers? Just wanted to do a little bit of a technical analysis on the markets as well as our precious metals. So quickly, Moody's has basically rated the United States credit rating with a triple A with a negative outlook, but S&P is still waiting for the outcome as far as what's going to be happening. I guess they wanted to see more of a decrease in spending for the future of the United States. They weren't too happy with just what was it, 1 trillion or so deduction within the next 10 years. That's pretty much a joke, nothing. So we'll see if they have the guts to actually downgrade the U.S. and then we'll see the markets continue to decline as well as the precious metals continue to increase. So looking at the S&P, several days of downtrend could have been broken today because of some technical companies pushing the Nasdaq up higher as well as the other indexes. We'll see about that. Gold is up 20.7, silver's up $1.72. Platinum, copper, palladium all down. Hey, market just closed. Silver and gold leading the way, at least for today and for the past couple of days. 4.3 for silver, 1.3 for gold. The complete opposite for palladium, surprisingly. Right? It's interesting to see. Looking at the markets in general, this is the SPY, a good representation of the S&P 500 ETF. Looking at that, we see a low here back in December of 2008. Defines the bottom of the channel, top of the channel, tested a few times. Then the bottom of the channel tested again on this weekly chart back in June 28. Then back again on October 2010. Hit a high back in May. Tested it again recently around June. Then we broke it as of this week. So major support line being broken here. Could be a jab out if we close the week below it. And we have a confirmation of next week. That could be pretty bloody for the S&P. As well as the other indexes being pulled down by it, the Dow, as well as the Nasdaq. So, not a good sign for the general markets if you're trading any of the S&P, Dow, or Nasdaq ETFs. Be very careful out there. So this week we hit a high in gold, 1675.9, and in silver we hit 4206. Very powerful moves. I guess a lot of traders out there, especially future traders, are wising up and not buying this whole debt ceiling raise. It's just guaranteed increased spending of the U.S. for money that we do not have. So, very bad sign for that. Back to the charts and do a check on the silver. So as far as silver is concerned, so for silver, we're seeing this bullish move up. 1, 2, 3, 3.5, maybe 4, 3 to 4 weeks in a row. A whole month of bullish move upward. But if you compare this trajectory here that we're going, this trajectory is very similar to what's been happening from I believe it was March till April. So we seem to be continuing that uptrend, very steep uptrend. So we'll see where we end up this week and continue starting next week. We'll see if we stay within this channel or just fall back into this QE2 purple line channel. That'll be very bullish for silver, but it's still higher lows, higher highs, and we're staying above this line right here, which is major support right now. It's about the 39.20ish range, and if we could close out this week above there, that'll be pretty bullish for silver. And I would expect silver to continue upward in the 42, 43 range, and the following 2-3 weeks, then we'll definitely bump our head right here in the 45. 45 is going to be a tough one to get through. The next one definitely be the 50 range. But we'll see, Never know what happens. If S&P actually has the balls to, downgrade the US, which should have been downgraded maybe 10 years ago, we'll see silver skyrocket, man. We'll just continue this trajectory and define our own channel. And then Mr. Ben Bernanke probably have to bust out the QE 2.5, 3.0, and sky's the limit for silver and gold. So let's check out gold. So looking at gold, very important trend line for gold is this top one. So we saw the low gold futures back in October 2008. We defined the highs based on the September 08, October 08, November 09. We tried it again here, the lower one, back in April 11 and May 11, 2011. And we tried it again last week, 725.11. Then the good thing this week, powerful moves for gold as we broke through it. The primary one and the secondary one, which were more of the shadows. So that's a very powerful move that we did right here with gold. So if we could stay above that, we may be breaking through this channel and defining new highs for gold. So 1700 is not too far away. So it'd be nice if we can close between these two upper trend lines right here, between the body and the shadow. That'll be very positive for gold, but never know. Hannibal could potentially increase margin requirements for gold like she did for silver back in April and May, and knock down gold. We'll see. Maybe it'll be nice to have a pullback in gold back to this green trend line here. Tested a few times in this, jabbed out, went back in. It'll be nice to see gold back at 1600 here, where I'll definitely go 2-3 feet in. Keep stacking out there. Be very careful if you're playing the general market, because definitely a lot of trouble out there. We'll see if I would expect potential pullback if S&P finally confirms that the US has continues to have AAA credit rating, which we all know is full of BS. And the other thing is, if the market continues to slide, then we'll just be begging. Everybody will be begging Mr. Ben Bernanke to continue with quantitative easing 2.5 to 3.0 and 4, 5, 6, 7, 8, right? So we shall see. Stay careful out there. Put your stops on. Buy physical. Prepare with food and water. So that's it. Silver Trader FM. Take care. I'm out for now.